Hey, what's going on, everybody? This is Marshall with Bids and Offers. This is my very first video that I've ever put on this YouTube channel that is long form and not a short and not re-uploaded from Instagram. So I wanted to record my screen here and go over this trade that I took today on the E-mini S&P 500 futures, getting short up here at these 56.68 and a quarters, and getting out down here at these 56.53 and a quarters for about 15 points on a stop that I had just above these highs right here for about a 2-point stop, making about 15 points, giving me about a 7.5 R return on my risk for this specific trade. So as you can see on my left side here, I have a candle chart with a 30 second, a minute, 2 minute, 5 minute, 15, 30, hour, 2 hour, 4 hour, so on. 690 minute, which is key because there's 2 of those candles in a day, in a session, and then a daily chart. So what I want to go over first is essentially this trade. I think in the next video what I'm going to do is go over how I use auction market theory, the volume profile, identifying trapped market participants to profit off of, and then how I draw my levels and my zones in my trading. So for this video, what I'm going to do is go over this trade a little bit more in depth instead of the quick reel that I posted on my page this morning, Wednesday, April 2nd. So basically what I want to talk about is the reason that I got short up here at these 68.25s. Let me just move this over for you guys so I can zoom this in a little bit. So essentially what I saw this morning, let's go to the 15-minute chart real quick. So this was this morning's open right here at this 9:30, as you can see down here. The pre-market, we made this low, and then at the open we actually broke just below this low. Could have been a nice setup here, getting long, targeting this high right here for me. So regardless of that, basically this buying came in really quick. It's tariff news day, and I was really surprised to see this really quick jolt of buying on a day like this. I honestly thought today might be kind of a slower tape day, or I'm sorry, a more thin book day, and then just a slower move day. But apparently we've put in about 120 points of positive strength on the ES today. So what I was looking for after this quick violent move up, as you can see right up in here, let me zoom this out just a little bit. So I'm gonna get rid of this volume profile real quick. And so this was the open at 9:30. We broke below this low, and then immediately the buying started to come in really heavy here. I'm going to go like this and then scroll over to the open so that you guys can see what that looks like on the footprint. So this is the footprint chart. I have it set to a 20 range volumetric footprint with basically just regular footprint bid and ask volume that is executed. This footprint shows you the total number of volume within a 20 tick range, which is a 5-point range on each one of these candles. These are not minute candles. These are not time-based candles. These candles are essentially only a distance of price movement. So from this low here to this high here, that's 5 points of price movement in this candle. And what this shows you is on the bid here, all of the aggressive market participants that have hit the bid over here to sell their position. Or to sell, I'm sorry, not sell their position, to sell at the market. Aggressive volume at passive volume, at passive bids. So if there's a bid in here, say the bid is 23, and 23 aggressive sellers hit that bid gets filled, and then, we keep moving to find other market participants to fill. So there will always be a passive participant sitting either below price, willing to buy it there, or above price, willing to sell it up there. And buyers have to buy into the sellers, and sellers have to sell into the buyers. So, I'll explain more about the footprint at a later date. But essentially, what this shows me is all of the business that is done at specific prices in terms of volume over a certain range of price movement. Again, these are not time candles. You can see it down here. Here's an example. Here's a 930, and then you have 3 different 931 candles, because all of this price movement in here from this low down in here, sorry, from this candle to this high up in here, all of this price movement was done within 1 minute. Okay, so these are not time-based candles. This move went very, very, very aggressively. I mean, we're talking like 60 points, basically straight up, as you can see over here, straight up into this VWAP. VWAP is the blue line. Forgot to mention that. This is a 200 EMA. So price moved all the way up into here. And what I saw as we come into this level here is we start to range out a little bit. So all this buying is starting to slow down a little bit. I don't necessarily mean slow down, but it's getting rewarded a little bit less than it was before, and that could be that could very well be because we were at our pre-market high areas in here, not pre-market high, but like 2-3 a.m. highs where we consolidated before this large move down to these 56 10s. So this area right in here was kind of a confliction point for this morning, but we eventually broke out of that area, as you can see here. When we kept going, we kept going, we kept going, and as we break out of this ranging area up in here, let me just move forward just a little bit for you guys. We came all the way up into these 5670s, yeah, almost 5671s. Now, what I have, please ignore these two blue lines. I forgot to get rid of these. Let me just remove those real quick and go back to the 15-minute chart. So on this 15-minute chart, as you can see from the overnight session, this was yesterday's close right up in here, and then we came up and then we fell. This was a consolidation range that was put in from 8:15 to about 3:15 in the morning. There was a lot of business done in this area, and the sellers would not, the buyers were held down by sellers right up here at this high. So the buyers were trying, they could not get above this high. As you can see in this little area previously, yesterday, the sellers actually initiated this move down before the rally at the end of the day. So this basically was what I was watching. If this rally continued with strength to the upside, I basically wanted to fade this rally a little bit back in as a mean reversion play. If these sellers in this box here could defend their position. So, these guys got short, or, they sold, they capitulated or whatever. They want to see their position get defended. So, I'll go back to the 1 minute here. This box, I'll draw this box for you on this chart just to make it a little bit easier. We'll go rectangle, and then we'll go up here like this. This is essentially the box right about there. So we come up into these 5670s. Yeah, it's just about, yeah, pretty much like 5670 is about the middle of that box. So essentially, we saw this final push with pretty elevated volume after 10 a.m. here. Pretty elevated volume, still above the VWAP. And what I saw up here at 5668 was this large positive delta. Every other positive delta that had been put in this entire move up, like, this is a reasonable delta, 150 over 7. That's a pretty decent positive delta, about a positive 150, but this was a pretty large positive delta. What delta is net aggressive buyers minus net, I'm sorry, not net. Aggressive buyers minus aggressive sellers. So you can see right here, this 517, I'll zoom this in a little bit for you, make these numbers a little bit bigger. 517 over 186. This is a positive delta of about 400, 350 in this area right here. So these buyers, there were a lot more of them hitting into an offer that was sitting up here. There was an offer sitting, and there were 400-ish buyers that were, let's call it 300 because it's 186. So there were many more buyers executing here, trying to get long, trying to buy the market, than there were sellers trying to get short into the market at this level. Now, if we look down here, we see all this red, and we see all this size on the bid that got executed. Now, after this positive delta got put in, we moved up like this really quick, and then immediately we moved right back down through this level. And then this entire area in here, this red, what this red means is that there is more, there's net delta, or sorry, negative delta at all these prices. There were more size executed on the bid than the ask, which means that there are more aggressive market participants selling than there are aggressive market participants buying at this level, at these levels. So after this positive delta got put in, I see price go like, it goes like this, up, and then smashes right down into this level here. It just continues downwards, all the selling comes through, and then we try up here again. It comes all the way back up. You can see the open of this candle opened at this candle's close right here. So this candle, these prices moved all the way up. I'm sorry, the market moved all the way up through these prices, and we hit this positive delta, this 517 on the ask level right here at these 69s. We hit these 69s, and immediately we jumped up like this, and then we put in even more positive delta. 209 over 97, that's plus 100. 218 over 151, that's plus 70. Plus 100, plus 100, plus 100. So there are a lot of buyers up here, and these buyers are not, the price should be up here. The price should be like up here at this point if all of this aggressive buying is coming in, and there is not an offer sitting in here sucking up all of these aggressive market participants that are buying the market. As soon as price comes back down below this positive delta, and I see on the tape over here, which I don't have that recorded right now because it's too wide of a screen. I'll fix that at some point. But basically on the tape turned kind of red, and I saw some selling start to come in. I saw some people, hitting the bid come in, and a lot of these sellers started to enter the market at these highs up here. Again, this from the lows this morning at 56.10 to 56.70. That is a 60-point move straight up, pretty much, other than this range that got put in, pretty much straight up. Now, I don't necessarily want to be the first seller. Being the first seller is a little bit more risky, and if I'm doing it, I would like my risk to be as small as possible compared to my reward. I don't want to make 2.5, 3.5 times my reward on my risk if I'm being a first seller. I want 5, 6, 7, 8, 9, 10 times my risk if I'm going to sell the market first. If I'm going to be all the way up here selling the market at the highs, and there's all this strength, what are the odds that price is going to blast through my position and stop me out up here? I want to risk as little as possible to make as much as possible if I'm getting in the market first. So I had my stop right up here above these highs. As soon as the market pulled back below this positive delta, and I saw the tape turn a little bit more red, I hopped in short here at these 56.68.25s. Right here, you can see sell 1 at 56.68.25. So I got short here at these 68.25s. My stop was up here at these 70.50s. So about 2 points of stop loss for about an estimated 15 points of target. Now I want to show you guys the reason that I went for this target. And I should have mentioned it earlier. I'm sorry, I'm not too good with these videos yet. This is my first longer video that I've posted. So my very first indication of, hey, maybe I should take a possible setup up here was this. I'm going to zoom this out a little bit for you guys to make it a little bit easier to see. I'm going to bring this up. Now I'm going to draw a volume profile, Control 3, from the 9:30 open right here. 9:30 open. I only use profiles from the cash session where most people are doing business. As you can see, before 9:30, there's not much volume. I only pay attention to the volume that is executed in the cash session, which is 9:30 to 4 o'clock, which is when the US stock market is open in Eastern time. So I draw this profile from here to current market price at 10:05, where I got short. Obviously, I'm not going to be able to know what volume comes in after current market price. So I'm going to draw that. This is what the volume profile looks like. So as you can see, it's pretty thin down here. We have a couple low volume nodes, one right here, and then another one right in here. Now, this yellow line that you guys see here, this yellow line is called a VPOC. This is a volume point of control. 58.53.25 is the highest volume traded in the cash session today. So price came up here, some sellers stepped in, price came up through, down, up through, and up. This price was transacted at a lot today, 56.53 and a quarter. Now, mean reversion tells me that if most of the volume was done on the day in this area here, who's to say price won't come back in and touch this high volume area again? Now, as you can see up here, this little node, this volume node that is represented right here, basically represents this area of price. Now, not only are we out of the first standard deviation range of the volume profile on the cash session by the top of the range up here at these 62.75s and the low of the range at 31.25s. Again, this is current market price. I only have it drawn out to here because you can't see anything past this level. If it was looking like the current market right now, that's all we'd be able to see. We wouldn't be able to see any of this. So, before I can talk about that all day. Hindsight. There's a lot of hindsight traders right now in this community online. So, basically, what I'm looking for are these buyers up here going to get paid? Is price going to keep moving up? Now, you can't know that before you find out. There's no way to know if they're going to get paid or not. But what I know is that when I am in a position and I'm not getting paid, I get out for as little of a loss as I possibly can. All of these buyers from these lows in here at 9:30 to 10:05, that is a 60-point move from 56.10 to 56.70. All of these market participants, it's pretty much just been buyers this whole time. There's a little bit of selling in here, but it's pretty much just been buyers. Now, after a 60-point move, most people would say, hey, you know what? I'm going to take some profits. I think that it's time for me to, capitulate on this move. We've already gone 60 points straight up and quickly, so I'm going to hop out and I'm going to take my money. So up here at these at 10:05 at these 56.68 and a quarters, I got short right here at these 68 and a quarters, betting on price on these buyers up here to get trapped and stop out or sell in this move here. As soon as we came below these lows, I expected them to start to sell and get out of their positions and the market to fall down into this VPOC right here, which it did. I'll go back again for you guys so you can see. So right up here, I was saying, okay, we're pretty overextended. We are in an area of resistance from the overnight. In here, this consolidation range got put in. Now, I'm putting these things together. VWAP is lower. Volume weighted average price is lower. This EMA is lower. Most of the price action is lower on the day. I'm a mean reversion kind of guy. If you know anything about statistics and you know anything about averages and means and moving averages, etc., you would know that price or data or human height or anything, it reverts to the mean. What are the odds of you walking into a room and finding a person that is 7'8" versus a person that is 5'10"? There's much higher odds of you finding a person in a room that is 5'10" than 7'8", unless you're in the NBA combine or whatever the hell they call it. So up here at 10:05, I get short, betting on price to come back into the most commonly traded price on the day. Volume shows this. Price action does not show this. You can note that, hey, there's been a lot of candles in this area, but you don't know exactly which price is the most traded. So this area right here at these 53.25s is the most traded price on the entire day. After 9:30, let's be clear, after 9:30, I only draw these profiles after 9:30 to current market price. Sorry, I'm kind of rambling here, but this is very important. So we came up into this zone, this consolidation zone where sellers supported the market last time to go down. What is happening now? You see all this positive delta up here right at this zone, and these buyers are not getting paid on their position. If all these buyers enter the market here and there wasn't anybody holding them down, the market should be up here or higher, but it's not. In fact, it's actually going like this. So this candle actually made a new low here. And as soon as the price tried to come back up here, it touched this positive delta at these 69s, this positive 350 or 360 delta at these 69s, and the market immediately moved down from there. I actually did almost get stopped out up here. I was 2 ticks away from getting stopped out, but I didn't. Sometimes that happens. It's pure luck. I have no statistical connection to that at all, but most of the time, I have more of a probability of getting stopped out, but my losses are very small compared to my wins. That is why my equity curve looks nice. It goes up and to the right. So my losses are paid for by my wins. Anyway, I'm rambling. Up here, I got short, betting on price to come back down. Click on this tab, back down into the VPOC, which it did. I got out at the VPOC, 56, 53, 25. I have VWAP, mean reversion confluence. I have EMA, mean reversion confluence. I have overextension price action confluence. Let me add an indicator. Let me show you what the RSI looks like. Wait, why did that not work? Hold on. RSI. I have to double click it, that's why. Apply. Look at what the RSI looked like up here. It was all the way up here above this 70 level. So typically, when it comes around these, it doesn't always respect it, but for those of you that like indicators, and I'm not the greatest fan of indicators. If I like any two indicators, it's going to be cumulative delta and RSI. But anyway, price came all the way up and it hit this 70 level right up here in this zone where sellers defended once before. So that's a little bit of an extra confluence to get short in the market. When the RSI is at 70, it's likely to pull back to the center of the range, which it did exactly. It pulled back right to the mean at 50, which is right where the VPOC of the day was at these 53.25s. I'm going to get rid of this RSI because I don't want it there. So yeah, so we have an overextension to the upside, a very quick 35-minute move for 60 points straight up, basically, into an area where sellers supported the market to the downside last time. They kept a lid on price up here. Now, currently, I am finding buyers getting trapped. You see all this buying, more buying, and now sellers are entering the market. You see that red? That's aggressive selling. You can also see that down here on this sell volume. There's 500 more sell volume in this bar than buy volume. 42 minus 47. That's negative 500. You go over this way. More buying. 48 to 46. Technically, price should be up here if there's 200 more buyers than sellers. Sorry, not more buyers than sellers. More volume executed on the ask than volume executed on the bid. You don't know if there are more buyers or sellers. It's all size. It's all relative. So, and then they try once more to get above that positive delta at those 69s. They fail. Price goes down. What do buyers have to do when they are not making money on their trade? They sell. What does selling do to the market? It sells into a bid that is supporting the market. What happens when there are more aggressive sell volume than passive buy volume sitting on the level 2? Price falls through it, as it did. Price came back into the value area, 56.72, 56.62.75 to 56.31.50, the value area on the day. One standard deviation of volume on the day was in here. The highest volume price traded today so far was 56.53.25. I bet on price coming down back into this level on a mean reversion play, speculating that the buyers who got in all this morning stopped getting paid up here and sellers entered the market to play it short. Now, I'm asking for 15 points on 2 points of risk. So, theoretically, I don't really want to ask for any more than that. I don't want to bet on price coming all the way down here to make 50 points on my 2 points of risk. That is astronomical return on risk. And the odds of price coming all the way back down into there are also lower. Because look at what happened. It just kept going up. It just kept going up. Now I want to maximize my reward and maximize my probability of being able to get out for my profit, for my predetermined profit. I always have predetermined entry, stop, and exit. I also moved my stop to break even once price got down here into these like 56s, 58s. Once we came below this high here with velocity, I said if price can come below, to this high and defend and come back up, I'll get out at break even, or I'll get out like pretty much then and there. But price came all the way down into this VPOC, and I got out at 53.25, selling at 68.25. That is 15 points of profit over 2 points of risk. 15 divided by 2 is 7.5. Let's do 2 divided by 15 really quick. 2 divided by 15 is 0.133. That means that I only have to win 13% of trades that I risk 2 points to make 15 points on. I only have to win 13% of those trades to be a break-even trader. If I'm risking a point to make a point, or for example 10 points, if I have a 10-point stop loss to make 10 points of profit, I have to win more than 50% of the time to make money. That is ridiculous. You will never, well, you can, but it is highly unlikely that you are going to be a consistently profitable trader if you are not making 2 times your risk when you win or more. You can, let's do 1 divided by 2. That's 0.5. So I don't know what, I lost my train of thought. Anyway, if you are risking a small amount of money to make a large amount of money, you technically have to win your setups less. I don't like trying to be right all the time. I'm wrong a lot of the time. I can take 3 or 4 stops in a day and take 1 winning trade, pay for all my stops I took, and come out in profit on the day. And I will have won on the day 20, 25, 30% of the time, and I will have made money. So I want you guys to focus on maximizing your risk-reward ratios instead of trying to get a high win rate. This is an example of a ridiculously good risk-reward trade, risking 2 points above these highs, saying, if these buyers can make a new high, I will get out for a loss because they are being paid. Now, I probably should have had my stop up here because it's a volatile day, but, you know, just hindsight. 2-point stop in these market conditions is very good. I'm very happy with a 2-point stop. I got short right here, stop above the highs, almost got stopped out, but when price came up here, it immediately came back down. And then it did the same thing. It came back up. The buyers tried to push through this positive delta here, which again is an offer. There is an offer here. Somebody willing to passively sell the market, to suck up aggressive buy market participants here. The buyers tried once again and they failed. And once again, more selling came in, more selling came in, more selling came in, and I am out at the 53.25s right down in here at this level. So even this level here, positive delta of 250 roughly, 240. These buyers still did not get rewarded. What happens when this low gets broken? More selling comes in. Okay? So I maximized my reward on my risk while having the highest probabilities as I possibly could using the order flow, finding trapped buyers at these highs up here, and identifying an overextension in the price action into an area where sellers previously sold the market off from, and targeting the highest volume price on the day, these 56, 53, 25s, where most people did business today. Mean reversion. If you guys know about mean reversion, you know that typically, not always, but typically, price will come back in to the mean. You know, if you got 100 people in a room, again, if you got 100 people in a room, how many people are going to be making 50, 60, 70 grand a year in America? Most of them, probably about 68% of them. 68%, which is one standard deviation of range from this high up here at these 62.75s down here to these 31.50s. This is where 68% of the volume was done on the day. This is just a standard normal distribution, except it's not normal because we have a very high volume node in here. If it was normal, it would look like this. It would be very balanced out. You can see that on like a daily profile if it's a nice balanced range day. All right, I'm gonna stop yapping. My next video will be a little bit more about how to use these tools instead of how I used them today, because I'm not explaining things very well, I don't think, but I'm happy with the way I explained this trade. I hope that you guys take something away from this. I hope that you guys start to implement this footprint and the time and sales and the depth of market and the level 2 and levels and volume profile and VWAP, mean reversion, all of these things into your trading, because I can guarantee you it will help your trading. It will help you become a profitable trader. It will help you prioritizing your risk-reward ratios first before your win rate. Right now in this trading community online, everybody's talking about win rate. Oh, I have a 93% win rate. Oh, I have a 65% win rate. That's great. Now show me how large your losses are compared to your wins. I bet your losses are, at least the same size as your wins, if not more. I don't like that. You will not last in this market, in this world, if you have a risk-reward ratio average of 1-to-1 or less. It just won't happen. So that's pretty much all I got today. Follow me on my Instagram at Bids and Offers, BIDSANDOFFERS, at Bids and Offers. I'm also on X at Bids and Offers 1, and I'm also on YouTube, which you're watching this video on currently, youtube.com/at Bids and Offers. Now, I got a lot of people asking me, where can I buy your course? Where can I buy your program, your community, whatever? I'm working on it. I'm trying to figure out what exactly I want to do. I know that if I am going to release anything, asking people to pay for information that I provide, it's going to be the best information. It's going to be the best course or membership or community or whatever that I can possibly create. I want to provide immense value to you guys, and I want to help people really understand the way that professional futures traders trade. Every trader is different. Everybody has their bias. Everybody has their edge. My edge is combining all these things together to make money consistently, not all the time, but consistently in the market using these tools that I just mentioned. Now, I'm going to go a little bit more in depth with this soon, but this is the video for now. Thank you guys for watching. Again, this is Marshall with Bids and Offers, and I guess that's pretty much all I got for today. So thank you very much.